Bill, and he's from BlackBull Markets here. Today, the first trading day of March, we saw equities bounce to the upside, and some would have expected gold to do the same, but it's hung lower around the 1720 mark. This is the low we saw in the last trading day of the month last week, where we saw that big sell-off to the downside. Of course, that came last week with the signals potentially from the Federal Reserve that they're looking at interest rate hike before 2022. Now, in addition to the stimulus bill package being approved today, with first of Joe Biden's presidency, of course, and the big vaccine rollout program in the US, appetite for the US dollar is back to the upside. Now, of course, it's been at those multi-year lows at the $90 dollar index mark, and we are seeing it bounce above that as well. So potential signal here for investors to sell gold. Of course, with the whole crypto boom too, we may see some retail money come out of gold and into the cryptocurrencies. So it could be a short-term sell-off. However, the higher time frames do support a more bearish tone to this trade, especially as we broke that 50% fib, 50% mean reversion, 1760.43, a price level we had targeted last week on Friday's video as a key support level. Now, as we know, gold likes to consolidate, and we saw from pretty much March to July, before we saw that big leg up to the all-time high, and consolidation within the same zone that gold is currently operating in now. So we could well see 1760 and 1687 as the new trading zone for gold. And if you're looking for a near-term target, a test of that 1687 is well on the cards for gold should this momentum continue. So definitely look out for another support to be hit at 1687. Bears, if they're looking to unwind their gold position, of course, it would have grabbed a lot of profits if they've been holding gold for a while. 1687 could be a nice support to come down and test, especially in an environment of course, an expectation of recovery, and we are seeing that also replicated in WTI crude oil. So do watch out for gold. Possible test of 1687, new consolidation area heading up to 1760, and we could well see markets continue to move sideways until we get more signals from the Fed about interest rate tapering, as well as the vaccination program or any other uncertainties could stimulate gold to the upside or the downside. But for now, have a look potentially lower. All the best.